Good morning. Welcome to another edition of Macro Analysis, released every Monday morning. Today is Monday, July 19, 2021. My name is Alexander Turro, Senior Market Strategist here at RGO Futures, where we contextualize the rates of change of growth and inflation, not only domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index having a counter trend bounce of 0.6% week over week as it continues to signal bearish on a 90-day trend duration. On the other side of that, you had the euro versus the US dollar correcting minus 0.6% last week as it continues to signal bullish on a 90-day trend duration. If you take a look at the Japanese yen versus the US dollar, that was flat on the week as it continues to signal bearish on a 90-day trend duration. And then if you take a look at the British pound versus the US dollar, that was down minus 1.0% last week and is teetering on a transition in trend from bullish to bearish and is currently trading at neutral trend. If you were following up these moves in terms of pivoting, positioning towards more of a deflationary type of environment moving into Q3, you would see the US dollar breaking out above trend, which comes in at around 93.30, which evidently you're not seeing here today. And on the other side of that, excluding oil, you would see commodities and oil breaking down in trend as well, which now brings us to commodities. They in fact did not come down last week. Those did inflate. If you like the CRB index, 0.4% last week, moving up towards cycle highs and up now 10% in the last 3 months. Oil has now corrected last week 3.7% from its recent cycle high to now plus 14.3% in the last 3 months as it continues to signal bullish on a 90-day trend duration. If you're taking a look at trend, you need to see that breakdown about below 62 or so. But more important than that is oil volatility. You need to see that hold below 44 to 45 or so. Touching on the agricultural sector and corn, that reinflated last week 6.8% to now plus 7.8% in the last 3 months as it continues to signal bullish trend as well. And if you take a look at some of these other sectors within the asset class more broadly, coffee, that inflated 6.5% last week to now plus 21.2% in the last 3 months. And if you take a look at the meats and hogs, that inflated 6.2% to now plus 11.1% in the last 3 months as well. Moving along now and touching on domestic equities, you did have, much like the CRB, the SPY and the NASDAQ, they did correct off near their cycle or at their cycle highs, with SPY correcting minus 1.0% last week to now plus 2.4% in the last month. NASDAQ corrected as well, minus 1.9% to now plus 2.8% in the last month. One of these does not look like the other, and that is the Russell 2000. The small cap factor exposures got hammered last week. Those were down minus 5.1%. Are now teetering on a trend reversal from bullish to now bearish trend. As if you take a look at the Russell, it's now down minus 6.5% last month and down 4.4% in the last 3 months. What's interesting to note here is the continuation counter trend bounce in the yield. You have trend coming around 128 or 129, but it's now teetering on trend reversal, neutral trend. However, what's interesting is that the 2-year yield continues to signal bullish on a 90-day trend duration as it was up 1 basis point last week and 6 basis points in the last 3 months. High yield spreads did move higher last week. It's 13 basis points, but it's still down 11 basis points in the last 3 months. You would need to see that also plus 300 over here in order to get a reaffirmation of this pivot. But just touching on global equities here, clearly you're not seeing that globally. If you take a look at Japanese stocks here in Asia, where their stocks and bonds are effectively signaling the same thing. Nikkei is down another 1.3% overnight, down 4.5% the last month. And then you take a look at Hong Kong, and the Hang Seng. That took a 1.8% loss, now minus 4.6% the last month. And Vietnam just got smoked for a minus 5.1% loss in the overnight. Certainly this move in oil didn't help European equities much, if at all. London opened down minus 1.8%. German and Russian stocks back down to the low end of their range. And if you take a look at Spain, that just continues to be a dog. Now down another minus 1.9% on the opens, now minus 7.6% in the last month. Mind you, we are coming up in through the meat of earnings here, as well as the ECB later this week and a host of PMI data. So with that, continue to remain data dependent. If you get any questions or like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head about there.